Hello, and thanks for joining us again for another episode of Ask a CFO. This is a weekly Q&A with my very good friend, CEO and founder of Vanreusel Ventures. And I'd like to thank all of you that have sent questions in this week. And I'm looking forward to getting started on those. But before I do, hi, James. How are you?
Hey Steve, I'm great. It's good to talk to you again.
Yeah, it's great. Good to see you over that side of the pond. Looking really well. And look, let's get cracking on these questions. Yeah, so it's obviously great for us to have some questions in from some people. So I'm going to start with some really good questions. I'm going to challenge you this week, James. That's for sure. So I've got a really good question here from Gregory from Ontario in Canada. And his first question for you is, what should the CEO's involvement be in the month-end close process? Really relevant for both me and you as CEOs, James. So
Yeah.
I'll leave you crack on with that one. What should our CEO's involvement be?
Okay. So that is a great question, because as you know, as a CEO of a software company, you don't want to see all the detail that the accountants are working on. And so what is it really? What are the key elements that you need to sign off on? And I think some of those, it depends on how big the company is. But if it's a smaller company, I think you do want to be in touch with some of the details. I think you want to be signing off on, some kind of a bank statement reconciliation so that you are aware of what is going in and out of the bank account. I think you want to sign off on, depending on whether you're a for-profit or a non-profit entity, on your income or sales, and making sure that it is being recorded correctly. So understanding, in the US, we have this year a new revenue recognition under GAAP called 606, that is quite a big change. And so understanding how that works, how the numbers are being portrayed, because the cash number versus the let's call it the accounting number, can be very different. And so how that gets presented to your investors can look very differently as well. And you might need to be able to explain that. So that's on the income side. I think on the expense side, really looking at, variances with the budget would be one of the big ones. Anything that jumps out to you on the expense side, and especially the drivers of the expenses. So a lot of times you would set a minimum level where you say, okay, well, the accounting team is doing all of this, and I'll have my controller or my CFO look at anything below a $10,000 variance. And then above that, the CEO has to step in and say, okay, explain this to me, in detail. So I would definitely look at that as well.
Great advice. I find these numbers, especially the month-end close process, I never saw the value originally, James. When maybe when I first started, in my business many years ago, I didn't really see the value of trying to close off a month, just trying to get from to year end and post better results year on year. But what I find is, as I kind of educated myself a little bit more, having these numbers allows me to make educated decisions. So I'm looking at budgets. I'm looking at actuals. I know what I can, what I can spend and when I have to hold back a little bit, and having the month end is really important. So from that point of view, is what kind of deadlines would you say are good for, CEOs and CFOs to adhere to close off the month? Should it be straight away at the end of the month, or would you say, well, obviously you've got to be a bit of grace for billing and that kind of stuff? So you're talking maybe the 10th, the 15th of the month. What sort of deadline do you look for?
Yes, at least the 15th. I would say that is standard for a one entity company. If it's multi-entity, you've got to wait for the other entities to close before you can consolidate, and then maybe you're looking at the 25th of the month. But if you're the CEO, the 25th of the month, the numbers are getting stale, and so how can you really make good decisions off of them? So I think the 15th is step one, and then as you get better and as your accountant gets to understand the business better, As you potentially upgrade your software, you bring it down to 10 days. And I can tell you that some of the big companies, the big public companies, and I remember this about Cisco back in the early 2000s, even when the software wasn't, that great, they would close their books within 3 days of the month.
Really?
Yeah.
Gosh.
So so it's not the size of the company. It's really how your systems and processes and your table of authority like running automatically and smoothly.
Yeah, that's really interesting, and I think that's a really good point, though, James. That you've got to aspire to aim for something, isn't it? Even if the first time you try it, you try and run this process, you can't do it until midway through the month after the month you're going in. But at least if you try, and as you said, you can stress test your systems to understand where you are and how you need to get better in order to pull that forward. And you said, and always try to aim for say if you're aiming for the 15th, try and make it the 10th, try and make it the 5th, and then, as you said, you'll get better and better. It's a really good point, actually.
Yeah, and one of the other things as well is there's the accounting close. And my initial answer was on, how do you close the accounting and do the internal controls? But then once the accounting numbers are in, you want to have your financial analyst or somebody actually do analysis on the numbers. So you want to look at the unit economics, the analysis of the variances, what's changed, so that you get an informed management report that you can sit down with and discuss.
And James, in your experience, I mean, obviously working with a lot of different companies, in both profit and for profit and not for profit sectors, what causes delays in closing that month off?
Sometimes it can be unique situations. So how do we, there was a special sales that came in, a special contract. How do we account for it because it's different? Maybe you want to talk to the auditors about it to make sure it's being done correctly. So that could be one of them. But I think in general, delays come from lack of communication, software that's not being used properly. Usually things like that. If it's a one-off delay, I work with some accountants in the Philippines, and they had what do they call it again? It's not a hurricane down there. It's a
typhoon
come through, and so they were 3 days delayed because all the power went out for 3 days. So that can happen as well.
Yeah. But that's a really good excuse, James. That's a really good excuse, isn't it?
It is. You want to check the weather forecast, but yeah. So.
No, that's a fair. And just finally, just while we're finishing off this subject, what are the benefits that you think of actually, having that month-end close?
Lots of benefits. I think there's one of the main ones is just accountability. That every month we're working through the numbers. We're seeing, for the CEO, we're seeing the numbers. We're seeing a progression of if it's the P&L, the income statement. How is every month trending? One of the other big ones that you might not think of is that it also prevents fraud because everything gets closed, everything gets reconciled, everything gets checked. And so typically a good system will identify any kind of fraud within at least 29 days, or it should. And if it doesn't, then there are some internal control weaknesses that need to be looked at. So I think those are probably the two main things.
James, I know, the reason for doing these things is obviously to engage with other business owners and to offer your advice, really. So I'm sure you'd want anybody's experienced some of these things and want some advice. You just wanted to get in touch, I guess, yeah?
Mm-hmm. Yeah.
Where's the best place to get in touch? Straight direct to you, yeah?
Yeah. You can email me directly, james@vanreuselventures.com.